Okay, guys, so welcome to our futures versus Forex training. We understand that Forex is much more popular than futures, but the question is, which one should you learn? Now, before I get into what's better and the differences, one thing I want to let you guys know and that can put you at ease is yes, you can trade the same pairs or pretty much almost the same pairs that you trade on Forex as you can on futures. You can also apply the same strategies. So whatever strategies that we teach you guys, you can apply those same strategies to futures just like Forex. So what's good about this, guys, is the indicator that we give you guys, the trainings and the live education that we give you guys. You can actually apply those same trades directly on futures or Forex. You can even take these signals directly on futures, just like Forex. So what is the big difference between both of them, right? Like which one should you learn? One good thing about it, guys, is again, when you learn how to trade, you can trade on the futures and the Forex market. The only difference is the benefits and the terminology. So we're going to dive into that. And you're going to be able to figure out which one that you're going to gravitate to. Obviously, again, whatever strategy you learn, which is the biggest deal, is going to be the same thing. The only difference is the terminology and the benefits. So let's dive into it. So for one, guys, let's talk about understanding futures or Forex. Now, why futures over Forex? Obviously, I did this one mainly because most people understand Forex. And so I wanted to make one for futures so you can figure out which one's for you. One is it's fully regulated with no spread manipulation. So let's kind of talk about that. When you're trading different brokers with Forex, if you notice when you're going through the charts, one broker might have a price and a different broker might have a different price. And that could be on TradingView or that can even be on your broker, especially your brokers, especially the brokers that are unregulated. So you might have one broker with a different price than another broker, or you might have a one broker with a 10 pip spread on this one pair where this broker has a 5 pip spread or a 3 pip spread. So it's just really all over the place. So it can be really confusing, especially when you're like taking signals or you are trading an account and you're used to one broker and then this broker has a certain spread. And so now it kind of messes you up. So I'll give you a perfect example using point number 2. It's easy to implement scalping strategies. So I like to trade indices. I like to trade NAS 100, US 30, SPX 500. And the issue when you're trading these in Forex is that the spread is so huge that it makes it hard to trade. You might go for 3 or 5 pips and the spread eats up all the profit. It makes it extremely hard to trade. Well, the good thing about futures is there's really just a one tick spread. So it's virtually pretty much non-existent. So it makes it easy to scalp. And so again, guys, remember we talked about it. The same strategies that you do on Forex, you can do on futures. So if you love trading Forex or you love trading US 30 or NAS 100 and you always had a hard time scalping it, but you were always right, it was just a scalp because of the spread and the price was messing you up, well, then you're going to really love futures over Forex. And I love indices, guys, because indices are so much faster. I can take a trade and be out in a couple of minutes, 10, 20, 30 minutes, way faster than I can never be in a Forex pair. So I personally like indices in general. Now, what's cool about it also is you can trade Forex pairs like AUD, USD, Euro, USD, pretty much all the major pairs and some of the exotic pairs. And it simplifies the setup of a practice account. So what that means is when you're trading Forex, you have to go create a broker account. Once you create that broker account, you have to set up multiple demo accounts and then go log into MT4, MT5. And it's just a lot of different steps. But with futures, you can just go in TradingView, set up paper trading, which I'll show you how to do in this video at the end of this video. And you'll have a demo account and you can make as many demo accounts straight from TradingView and just trade and practice futures. And so it makes it super simple where you don't have to do a whole broker process. And when you do want to set up a broker, you can still connect it directly to TradingView to still trade. And that goes to my last point. It allows direct trading on TradingView for demo accounts, live accounts, and prop firm accounts. So you can actually trade a prop firm account directly on TradingView. You can trade a live account with your personal money directly on TradingView. You can trade a demo account directly on TradingView. So it takes away those extra steps. I've seen a lot of people that try to take a trade, but their price is different from TradingView to MT4, MT5, or it's just that extra step where they have to go from the computer to their phone. But this one, they just press buy or sell right from their computer or from their phone, and they're going to be in a trade. Now, the recommended broker that I suggest you go to is going to be Tradeovate. And with Tradeovate, you're going to be able to connect your live account directly to TradingView. You don't have to go straight to Tradeovate at the beginning if you don't want to. Again, you can just go straight to practice mode, which I'm going to teach you how to do on TradingView. You don't have to create Tradeovate until you're ready to go up to a live account or your prop firm account. Now, let's talk about understanding futures and what's the difference. So we understand pips and we understand when we're taking a trade, for example, we believe that the market is going to go 25 pips in profit. Well, we choose our lot size to figure out how much we want to make per pip. So, for example, a 0.01 is 10 cents a pip, but a 0.10 is $1 pip. And that also vastly varies based off what pair you're doing. So the lot size is going to be it can be very confusing for a lot of people, mainly because not only does it vary, but it varies per pair also. So calculating the lot size and calculating what lot size you can do, the risk, a certain dollar amount can be very confusing, and to the point where you have to go download a calculator called FS Calculator or use one of our softwares to figure out what you're going to lose on that trade, right? To figure out just the dollar amount. It's just a lot of extra steps. And with trading, guys, trading moves very fast. So when you're having to do all these extra steps like figuring out what you're going to lose, it can be very confusing. Well, what's cool about this is they use ticks. So for example, if a particular, let's say I'm trading NAS 100, and NAS 100 is 50 cents per tick. So if I have a 50 tick, I got to fix that. I put pip, 50 tick stop loss, then I'm losing $25 because every tick is worth 50 cents. It's not, I don't have to do any extra calculations. Literally, it's just very simple, straightforward. And what's cool about it, it actually shows you the dollar amount as you're doing it. So it tells you the dollar amount, which I really don't understand now when I think about it. Why doesn't Forex just tell you the dollar amount before you press the trade? Now, the contract size is similar to the lot size. Remember, we're talking about 0.01, 0.02. Well, the contract size varies depending on the pair. So, and it tells you what the contract size is, and you can go to like www.cmegroup.com, and it'll tell you the contract size per pair. So, for example, NAS 100, it'd be 50 cents a pair or $5 a pair, and I'll kind of give you the difference with the micro mini later in the next slide. But pretty much, like for example, AUD USD might be $1 per tick versus on the contract. So if you have 10 tick stop and you have one contract, that's $10 stop. But if you have two contracts, that becomes a $20 stop. If you have three contracts, that becomes a $30 stop. So each contract size varies on the pair. Now, it has the same market hours as Forex, and they have something called a front month, which is basically, for example, every quarter, you just trade that particular quarter because that's going to be the most volume. So you might see, for example, September, December, NAS 100. And so December, if our current front month is December, there's not going to be that many people no longer trading September, and we're now trading December, and it's always the third Friday of every month. It's not really anything hard to know. It's just I want you to understand what that was. So if you see different months like that month, then just do the front month. Like if I know that I am currently in March, I'm going to be trading March, April, May, and then when June comes in, I'm going to trade June, July, August. Then when September comes in, I'm going to take September, October, November, then December, and so forth. So let's talk about mini versus micro. Just to keep it simple, guys. Mini, and a lot of people used to overthink futures mainly because they thought you need a lot of capital, and you did at one point. You need so imagine this. Let's say before micro, you're only trading mini. So NAS 100 is $5, right, per tick. And so if you had 100 tick stop, which is easy with NAS 100, that's $500. You can't trade with a $500 account on NAS 100 if your stop loss is $500, right? So they came up with something called micros. And so with micros, it's 10 times cheaper, just to keep it simple. So if AUD USD is $10 a tick, then it would be $1 a tick on the micro version of it. If NAS 100 is $5 a tick on the regular, then the micro version would be 50 cents. So it's really just that simple. So just think about it. It's going to be 10. The micro is great for small accounts or if you have large stop losses. So let's say that you have 100 tick stop. Well, if you did $10 a tick times 100 pip stop, you're risking $1,000. So you say, you know what? I don't want to risk $1,000. I kind of want to do some low risk stuff, but I don't want to lose. So let me do. I only want to lose maybe I only risk $200. I don't know how big. Let's say I only want to lose $200. So what you do is you go to micro, and instead you do $1 pip times 100. You're only risking $100. So what you do is you make a second contract so you can get twice as much, and now you're risking $200. So two reasons that you'll go to a micro. One is you have a large stop loss and you need more wiggle room, so you just add more contracts to figure out what your stop going to be. Or two, your account's too small to do a mini anyway, so you will always just do micro. Now, the benefits of a prop firm. Prop firms are very popular in Forex. But I think the biggest issue with the prop firms is it was very hard for people to pass. And if they will mess up any rule, they will have to go repay for the entire account. So I think a lot of people will appreciate the prop firms on the futures market. So let's kind of give the differences, right? One is the benefit is you only have to get 6% on a futures prop firm. So if you got a $50,000 account, you only have to get 6%. That's $3,000, and you got unlimited time to do it, and you get the account. On a Forex prop firm, usually it's 10% the first time, and then you got to go back again and then trade it, and then you got to get 5%. So that's one thing that I like with the benefit of the prop firm. Benefit them too, it's much cheaper. So for example, for a $50,000 account, you might pay $400, $500 for the challenge. And with the futures, you're going to pay $150 activation fee one time. And then every month, you just pay $50 a month until you get your 6%. Once you get 6%, you no longer have to pay the $50. And what's cool is number three is the retries. So let's say that on a Forex prop firm, you got the $50,000 account, and let's say you breach your daily loss. Let's say that's 5%. So let's say you hit $2,500 loss. Well, now you have to go repay for another $400, $500 account. So if you lose 5 times, you mess up 5 times, that could be $2,500. Now, let's say on the futures, what happens, if you hit your daily drawdown, they don't penalize you. They just have you stop trading for the day. But let's say you hit your max drawdown. Let's say you hit the max you can lose. Well, what they'll do is you can either wait till you have to pay when your $50 a month fee comes up, you will have to go pay. Once you pay that $50, they'll reset you back to $50,000 and you can just start over again. So you don't have to go and pay another $400, $500 or $150 activation fee. You just pay that. You just pay your monthly fee, and then you can just restart over. Or you can pay early and say, look, I want to just start over now. I'll trade recklessly this first 2 weeks. And you can just pay them $50, and then they'll reset your account, for example, back to $50,000. So what's cool about it is it's much cheaper to just retry and mess up. So they give you a lot more wiggle room to mess up. Like if you mess up on a prop firm, you might come out of pocket at least $2,500 to $3,000 messing up. With this one, you can just keep trying every month. And if you really need to get out, so you can take your time. And worst case scenario, like I've seen people like be negative 3% on their prop firm. And now instead of them having to get 10%, they got to get 13%. But let's say that at the end of the month, you're negative 3% on your futures account. You can just reset the account, start back at 50,000, and then go for 6% from a fresh account. Another thing is faster payout. So you don't have to wait 45 days for your first payout. So I think that's also a really big deal. So another thing before we get into the trading view is that if you do plan to trade the indices or the CME groups, it's extra $5 that you're going to pay. And I'll show you where to go find it. It's just the package. It's like $5, but it's definitely worth it. Because unlike Forex, if you notice, Forex has all these different prices on the brokers. But with futures, you need to pay that $5 because you're going to get the CME prices where every price is the same. That's the only price you want. You want the real-time data. So it's just only $5 a month, and you get the same data no matter what broker you're on. So highly suggest that. And I'm going to show you how to do that in TradingView. And I'm going to show you some examples on actually how to buy and sell, how to set up your demo account, and so forth. So we're in TradingView, guys. And the first thing we're going to talk about is how to get the actual live data if you don't have it yet. So if you go here and you go to account and building and you scroll down, you're going to want to add the market data, right? So the market data you're going to want is right here, CME Globex. And it should be like $5 or whatever. You can hit add market data. And then you can find it and it should be like $5. Or this one's actually like $7. So CME Group, that's the one you just purchased. And they got other ones here too, but this is the only one that I think really matters. So just $7 a month and you're good to go. So, and you can do it like annually also if you like. And that would be like, for example, $84 a year. So now that you got out the way, let's kind of just talk about it. Now, in order to find futures, as you can see, once you get your market data, is you're going to go and look at futures. So they have lots of different type of future contracts. They have the single stocks. You can trade different stocks. They have the world indices that we're used to. They have the currencies that you love. So they have Japanese yen futures, Australian dollar futures. They have metals that you love so much. They got the gold and so forth. Now, there are two type of futures that you're going to look at. So if we type in NQ, that will stand for NASDAQ. That's the one I like to trade. We have the NQ and the MNQ. So like if we look at MNQ, that's the micro. So we have the micro and we have the NQ. So pretty much everything always has the micro or the mini. So as you can see, this says micro, E-mini, NASDAQ 100. Then we have the E-mini. Remember, the micro contract size is 5 times cheaper. So we're going to just look at this one first, and then we're going to show you the difference. So let's look at micro NASDAQ and just trying to show you how it works. So so you can just follow along. I'm going to show you how to set up a paper account. So this is just a test account I was messing around with, but I'm going to log out real quick and show you how simple it is to set up a demo account. So in TradingView, what you're going to do is you're going to go down to paper trading. I'm going to log out this account so you can see how I do it. And you're going to scroll down and you're going to do paper trading. Now you can still you can create a TradeOvate account on tradeovate.com. And you can actually do a demo right from TradeOvate also. I'm not going to, you just Google TradeOvate. But I just see, like, if you're just practicing and I don't really see it right now that even you can make a TradeOvate account and create the account. But I suggest just going straight to paper trading is much easier. Just click here, hit connect, and boom, you have your demo account. And you can make as many demo accounts as you want. Just click here. So we're going to create a brand new account right now. I'm going to say, hey, let's say I'm practicing for my $50,000 prop firm account that you're going to get one day. And so maybe you want to do that and say you want to put in the, we'll call it prop firm practice. So that's how you're practicing for your $50,000 prop firm account. But oops, you can't have the spaces. So boom, now you have your demo account. Super simple. And you can have so many different accounts. You can create as many accounts as you like. And you can do stuff. You can reset the account. It makes it super simple. So that's how you create your demo account to start doing futures. So now we're looking at futures. And so there are different things. So for buy and sell, same thing. Buy means we're thinking the market is going to go long, go up. Sell, we think the market is going to go down. So you can go right click and go to settings. And if you want, you can go to trading and you can do like buy and sell buttons, turn it on and off. If you want to, you can see like the instant order placements. You can set your alarm up, positions, all kinds of stuff, right? So let's just say we have it like this. So let's say you want to do an instant buy or sell on the micro NASDAQ. So here are the contract sizes. So remember, you can do one per contract. So let's say we're doing one contract to keep it simple. And I want to do a buy, for example. I just hit buy, boom. I'm instantly in the trade. It's that simple. As you can see, and what's cool about this is like usually guys, you're trading NAS 100 definitely around this time. You will literally be, I can literally close the trade right now and have made money. Just like that. Now, let's say we did buy. And let's say I wanted to do my stop loss and take profit. I can just click on here and I can drag my stop loss and you can see the dollar amount you're going to lose as you're going down. So let's say that my stop loss is down here and I'm going to lose, for example, $230. And let's say that my TP is here and I'm going to gain $310. So I know exactly what I'm going to make and what I'm going to lose. So let's go look at like on a lower time frame, for example. I like to trade the lower time frames. And what's cool about trading lower time frames is that you don't have to worry about spread, because remember, it's only like you can just have like super tight trades and boom, it has these nice trades. Now, that's off of one contract. Let's say you want to do multiple contracts. Then you can just choose here and say, look, instead I want to do one contract, I want to do 3. And hit buy. So now it's 3 contracts. Now let's say that I want to have it where when it gets here, I want to close 1 contract out. That's how you do parcels with the futures. So I can just right click. And so how futures works is you just do the opposite direction of the trade. So if I'm doing a buy, for me to close out 1 contract, I had to do a sell. So I hit trade, I hit sell, that's my sell limit. I just double click on it. And then I can just click here and say, look, when it gets here, take me out at 1 contract, modified order. Now let's say that I want to do multiple TPs. Let's say right here, I want to take another one. And let's see right here, I want to do another one. So now I got multiple TPs, so it's going to take me 1 contract here, then it's going to take another contract out right here, and another contract right here. And let's say I want to do my stop loss right here. And let's say as the trade goes up, I can just move my stop loss. So it's easy to move your stop loss and profit away, and you can be doing it real time. If you don't want a stop loss, you can take it away. If you want to re-add it, you can. You can do that. Super simple. Now, let me show you what's really neat. One of my favorite tools is the long and short tool. So let's say we're looking at the market and we take our trade and we say, you know, we're marking our charts up. I put my stop loss right here. So I put my take profit right here. I like this area right here. Let's see, I want to be a little more risky, so I'll put it right here. So I like this trade. I can right click, create limit order, and I can do market execution. And I can see everything right now. I got a 60 pip, a 59 pip take profit, 45 pip stop loss. I'm going to lose $22 if I lose this trade, $33 if I lose this trade. I can hit buy. Now, let's say I don't like those parameters and I want to change it up a little bit. Maybe I want to bring it down some more, bring this up some more, whatever. Instead of I can just do right click, create limit order, and it updates my information. I can also, if I want, add extra contracts. And let's say you want an easy way just to figure out your contracts. Again, you can go to CME group, and I'll show you how that works. CME group. And so you can see your contract size by just going to market. That's what we're going to go to. Let's say we want to know what our contract is per trade. So we go to markets. You're going to pick something or you can search it. So let's look at E-mini NASDAQ. And then we're going to go to specs. And then it tells you it's $5. $5. So let's say we want to look at micro. Let's look at what micro is. So we can look at M and Q instead. Micro. Search. Micro NASDAQ. We go to specs. Let me see. Let me see. Let me see. Make sure I picked that the right one. Oh, there it goes. 50 cents. So that's simple. And another way you can do it, if you want to just be lazy, is like, let's see that I click here and I choose 1 contract and I choose 1 stop. That's 50 cents. So that's how I did it. It was just so much simpler that way. I just type in 1. So I know exactly what each contract is. So if I did 10, I'm losing $5. 20, I'm doing that. So it's very simple. Again, you can just, cool, I got a 70 stop, create limit order, boom. Give me my 70 stop right here, losing $35. So very, very simple. I hit buy, boom. If I want to adjust it, simple. Now, let's look at it on a mini version real quick. NQ. And let's do a buy, the same kind of buy. Let's do 70 again. And let's hit add contract, create order. We're gonna do 1 contract. Now I'm risking $265 for the same 70 pip stop because it's 10 times more. So actually, my stop time is 70. That's 70. I'm risking $350. So it's a big difference between the stop on here and the stop on the mini. So this is great if you're just if you have a large account, it's $350, and you don't want to have to add a billion contracts. Then you can do it like that way. So it's different ways you can do it because each contract is commission. So you can get less commissions by doing the minis, But with the minis, you want to, it's higher. So big accounts, minis, or large stop losses, micros, or small accounts, micros. Super, super simple. So let me see, what else is there to know? It's pretty simple, guys. It's like it tells you the dollar amount. Again, you can come down here and just look at your trades. And so like I'll give you an example, just one I was messing around with. I can just look at my orders and look at my history, and I was just taking buys and sells with this one. And you can look at your account history right here. It tells you what you did, tell me how much I lost. And so it's really just super, super simple. And just you can just watch your trades from here. Now let's look at some other pairs, right? I like the futures. Let's look at, like, for example, AUD. So there's AUD, and so there's AUD the futures or AUD micro. So let's do AUD micro. So boom, let's look at it on a 15-minute chart, right? So, and remember, like, here's the cool thing, guys. The AUD here is the same thing as the AUD on the Forex side. So I got my stop here, contract, create order, one contract, 21 pips, or 21 ticks, that's $21. So it's super simple. Hit buy, you're good. If I want to change it up, you're good. Maybe I want to scalp. Maybe I only want to go for 5. I want to go for $10 or whatever. You're good to go. So I'm going to have more dedicated training on other things, like more dedicated training on the prop firms and getting you ready for the prop firms. For futures, I'm going to go over how to set up your broker with Trailevate. So we're going to have dedicated training, but this is just but whatever we teach you guys as far as day trading, you can apply these strategies. Doesn't matter if it comes from me, Mello, or Delaney. You can apply these strategies on futures also, so you don't have to relearn how to day trade. All you have to do is just learn the terminology we went over today. So instead, your stop loss and take profit is still the same. Your entries are still the same thing. All you now is, instead of lot size, is contracts. Instead of pips, we got ticks. This is easy. You can trade directly from MT4. Trading View. You don't have to go to MT4, MT5. And that's pretty much it, guys. You can paper trade or live trade right from your Trading View app also. And it's just much easier to just mess around with things and just type in the price and just change it whenever you feel like. So hopefully this video was helpful, guys. I like futures a lot because you don't have to, definitely if you're a scalper. I like trading on the 3-minute chart for NAS 100. So when I'm trading, it's hard to trade on the 3-minute chart when you when it's like, these are some of the trades I was taking, right? I would just do like for example, I did a buy here. I was able to close right here and still make some really good money. And I did one contract size, buy here. I was able to close out right here. I was able to do a sell here. I did a sell here and closed out here. I did another sell here, closed out here. And I still made like almost like 1 or 2%. And I didn't risk much. Like, as you can see, my biggest loss was like $33. And these is on a 3-minute chart. I mean, this wasn't that much big of a move. I was able to like do really tight stop losses. I was just trading the New York session right here. So we're going to teach you different strategies that you can take. I think this is going to be a great benefit because when you're trying to pass prop firms, you can take your time. You don't have to be frustrated when you're in drawdown and you negative 3%. You can just reset the account. It's super cheap to do it. And we're going to be doing live trading for our lifestyle members. So if you're a lifestyle member, you can do live trading with us on Thursdays. Eventually, it's going to be Tuesday through Thursdays. And we're going to be just trading the futures market live. And of course, if you want, you can trade the Forex market at the same time. Because remember, same strategy, same pairs, just different approaches.